Hello guys, welcome back to the Lumley trading video. In this one we're going to be doing some in-depth stock analysis on Bed Bath & Beyond, ticker BBBY. Reason for this is obviously you can see big momentum today. We are up nearly 6% as we're recording this video, and actually now can be an interesting time because it keeps coming into kind of this range of around $4.75 to $5, acting as heavy resistance intraday. So I would be watching that for today. Really, if we can break out of here, be watching for that breakthrough, come back to test as a support, and if it holds, good indication that will probably continue higher. Otherwise, really, if we start to kind of break this, I mean, you can kind of use this as a head and shoulders pattern. If we start to break below kind of 430, again, we'll be looking more to the downside. But to get into the proper technical analysis that we're always paying attention to, and this is the standard deviation using a 6-month and a 1-year chart. Again, if you've been watching this channel for a year or more, you'll know we basically always use this for our technical analysis because it just works so well. So what are key resistances if we can continue this upward momentum? So if we're only paying attention to statistical deviations instead of looking for kind of the intraday technical breakouts, then really to me there is no trading opportunity until about $5.88. Now what trading opportunities actually kind of provide themselves here? So really the first time we hit these deviations, I'm always looking at them short buys. So the first time we hit 588 and the first time we hit about 658, both of these times really I'm just looking at them as short buys levels, meaning again obviously taking the stock short, whether that's through outright shares as a day trade, or if I may be looking more to swing it or want to kind of want to leverage my intraday trade, put options. Really that's going to be the main thing I'm looking at. Now, and we'll go through when we go up the higher deviations. There's another way we look to trade this, but again, we want it a bit more extended before we look at that kind of trading strategy. So obviously those are the first two key ones. Probably quite a hard thing to break through there, but if we do, again, better to be prepared, but really quite unlikely that we do. If we do break through though, then we got next resistances at $9, $12.25, $12.85, and final levels taking us out to $15.50. $19, and a final one at $25.50. Now, so onto the other strategy that I usually pay attention to when we start to squeeze a bit, and why I said I probably am not too fussed at it around the $6. So what this is using either debit or credit spread. So again, if you don't really know what they are, there is a channel on the video if you want to check that out, or again you can just search it up on Google or on YouTube and you'll get a video on it. But basically all it is you just saying by the time of expiry you expect the price to be below a certain level. So for example, if price pushes all the way to $9, if I look to do a debit or credit spread at this level, I can basically make the option so that if it's below $9 at expiry, I get to keep all the premium. And the reason I like this trading strategy on the squeezable stock is usually we go through the credit spread route, and the reason for that is you tend to, well, the options get very expensive on these stocks because again the implied volatility gets really high. So if we can start selling credit spreads if they expire out of the money, which is what we would want, which basically means it closes below the $9, we would make whatever, or we would just keep the premium we made on the credit. Now, the reason we like to leave it to these higher up levels, so really this $9 and above, is if it breaks out of this level, again, we can probably get a month or two out expiry. We don't expect it to really stay out of that level like we had in this previous squeeze. It broke out, even if we sold it at $9, which I mean back then there wasn't a deviation at that level, but if there was, again, you do that a month or two later, it's below that price, and no matter what, we still would have made our max profit. Even though it went so far offside, because again we couldn't have taken, we have a defined risk, so we still wouldn't been able to have a max loss. We could have just stayed in the trade. The way you trade them is usually just until they expire, or maybe you close them out a bit early if you're in quite a high amount of profit on it. But really that's the overall strategy, and if we start squeezing up to 9 or above, that's definitely the route I'll be looking to trade from my personal account, just because again it's a really high probability trade setup. And usually it's a one-to-one risk to reward, but considering the high probability, to me it just always makes sense to be looking at it as a worthwhile trade. And it's the thing I've done on GameStop, Bed Bath & Beyond, AMC, all those stocks. Really they just provide the same trading opportunity each time whenever they squeeze, really just playing against the direction. But again, it can be hard to time, so that's why I like using it through the debit or credit spread form. But anyway, on to more levels. So those are the resistance levels obviously I'm paying attention to. Onto the support side, I do have supports at 260 and 30 cents. So really these are the only deviation based supports we have. And as you know, between statistical means, usually on level I'm looking to trade because direction is unclear, and really from my technical side of trading edge, there isn't really much of an edge for me to trade within this area. So I don't tend to trade. So really, I'm only really looking at this stock as a short bias opportunity trade. But if you are looking for supports, obviously we are looking at 260 and 30 cents. 30 cents is probably quite unlikely, but it's always there. But really, all I would be paying attention to within this range is kind of just psychological levels. It would be the key thing. So obviously $2, $1.50, $1. That's really going to be those key levels within here where there most likely will be a good trading opportunity. But otherwise, like I said, really, if I'm trading it, and kind of how I will be trading it is if it squeezes, I would play it as a short bias trade. But to me, it's not something I want to buy to the downside because really you don't really know how long you're going to be holding, and that's why I don't really like trading it to the downside. And again, you're buying in the anticipation that it squeezes again, not on a real kind of fundamental reason. So that's really why I don't like trading to the downside of these stocks, and instead we'll trade if it goes to the upside. Anyway, I hope you enjoyed the breakdown on Bed Bath & Beyond. If you did, why not drop a like and subscribe and check out this analysis video.